Program as well. Let's get this done. Okay, let's dive into it. Justin, take it away. Give him a little bit of an introduction.
Fantastic. So, hey everyone, welcome back for another exciting episode of OSIS. I'm your co-host slash host, Justin Francisco. I'm the CMO at OSIS, and we're joined here by Jalal Ibrahimi, the co-founder. And we're looking forward to giving you another fantastic episode today. So, what did we chat about the last two episodes? I always like to start with a little recap, start to frame the conversation in a sort of progression sense. So the last two episodes, we talked about Bitcoin, its history, why it was created, and how it was essentially formed as a rebellion against centralized control of finance, and that's what started the cryptocurrency revolution. After that, we saw the explosion of altcoins being created, introducing the possibilities of smart contracts, which enabled complex interactions without the use of a middleman. And that's what's really kicked off this whole trend of personal empowerment and decentralization. So in this episode, what I want to do is I want to take you through how to actually enter the space and start to invest. So first of all, you're going to need to know about a couple of things, and those are the differences between centralized exchanges and decentralized exchanges, otherwise known as DEXs and SEXs. So the centralized exchange options are going to be often the easiest way for people to first get into the market. These are examples such as Binance, Coinbase, Crypto.com, and they offer a lot of pros and cons, but some of the pros are that they're more user-friendly. So basically, anyone can come in, they can buy cryptocurrency with like a credit card or like a bank transfer or something like that, an e-transfer. They've got high liquidity, so you're not going to be moving the chart too much by trying to get involved. And there's also customer support. So I mean, that's going to be great for newcomers in the space. Like, let's say you're doing something, you don't know what you're doing, something goes wrong. There's customer support there. It's harder to kind of make errors on centralized exchanges. There's a couple of cons as well, though. There's the risk that it's centralized, right? So it's vulnerable to hacks. There's potential regulatory problems that might come about as a result. Maybe regulators are going to shut down the exchange. That could be a problem. And there's also often the need for KYC. And so what is KYC? That stands for Know Your Customer. And what that means is you need to provide identification. Often that's like your passport or your ID to verify who you are. And then that's going to have all kinds of implications with the government. They're going to be tracking your taxes potentially that way as well. Alternatively, there's DEXs. And these are things such as Uniswap, SushiSwap, PancakeSwap, etc. The list goes on. There's tons of DEXs. Even at OSIS, we're going to be building a DEX. We're going to have OSIS Exchange up and running, and it'll function with a social enabled component as well. That's going to be a huge innovation in the space. But some of the pros for DEXs are there's no need for that KYC. That's pretty nice. You can access them from basically anywhere in the world, whereas those centralized exchanges sometimes have limits on which country you can access them from. You're going to hold your own private keys on these DEXs, right? So you're going to be accessing them from a wallet under your control. And your private keys are essentially the list of words that enable you access to your coins. So that means you are in full control of it. Um, there's some cons though involved as well. So lower liquidity. Potentially sometimes there's going to be slippage when you execute trades, especially on like newer tokens. And slippage is when, let's say you're trying to sell at a price of $1, but there's not enough liquidity in the market. That means that the price is going to move down as you're selling, and you won't necessarily get out what you were expecting. And these are going to be much more complicated interactions. So they're going to be less user-friendly for new people. Like you're going to be engaging with these things through MetaMask and engaging with smart contracts. It's going to have a higher barrier for entry. And also there's a potential for higher fees. Network fees can sometimes be quite high, especially if you're using Ethereum. But there's plenty of other networks that exist that are trying to address that problem. The network that OSIS is built on is Polygon, and that one has far less fees. It's far cheaper to operate on Polygon. So once you're up and running on a centralized exchange or a decentralized exchange, whichever one you choose, you're going to start researching projects. That's how you're going to start to figure out what you want to buy. And my recommendation to you is you really want to have an investor mindset more than a gambler mindset. And so you're going to want to look at projects that are making like real innovations in the space. There's a lot of meme coin hype right now, and those are all well and good, but that's quite similar to gambling because these projects, they're not necessarily doing anything other than just being like a meme or a Ponzi, you know, like people are going to get involved and they're going to say, yes, pump this to the moon. And then you're going to get involved and more until the price goes up, but it's not based on anything really. So it's riskier, for example. Real projects are investments. They're things that are going to be doing like real innovations to try and change the world and make the world a better place for the actual person. There's a couple of good websites you can actually use to check out various projects, such as CoinMarketCap and CoinGecko. These websites index many cryptocurrency projects, thousands of them, and they also categorize them using all sorts of metrics. So let's say you've heard something about the tokenization space. You can filter by that category and see projects that are operating in that category. Or if you're interested in meme coins, there's a category for that as well. They're great places to check the charts in a user-friendly way. There's other software for that as well, which we're going to get into later. Um, but that's mainly what you want to do is you want to start researching projects through there, and you also want to be checking white papers. So let's say you come across a project. Okay, you come across OSIS, for example. What you want to do is you want to go to the project's website, check out their Discord, and just see if things are looking legitimate. Does the website look professional? Is the team doxed, also known as are they verified? Like, are their identities verified? And maybe check Twitter as well, see what they're doing on Twitter. Are they posting frequent updates? These kind of things. You want to do your due diligence to make sure that project is actually legitimate. And furthermore, you want to identify if a project has an actual use case. So what real world problem is the project claiming to address? And you want to get involved in the communities and see if the community members are active and friendly. Let's say you go into the OSIS Discord and you ask a question. People are there right away trying to help you out and answer your questions, offer community support. There's a couple of things that I would have to say you'd want to steer clear of. If you're looking at a project and you see these things, I would recommend you might want to pull back or give it a second shot, give it a second look. One of these things is if a project promises very high yield. So for example, if I'm investing in a project and it's claiming to give me 200% back in yield over the course of a year, I mean, where's that yield coming from? Like, where are they going to be generating that amount of profit to be giving me money back on top of my investment without even selling? I've never seen them go too well.
Well, Justin, quick question for you. When you say yield, what does yield mean? What does it mean when a project promises you 200% yield?
Sure. So yield would be if I invest $100 and they say they're going to give me 200% yield over the course of a year, they're going to give me $200 back on my $100 investment without me selling. So they're going to give me essentially like free money in a sense. And this
Okay.
isn't a scam in itself. Yield is not necessarily a scam, period. For example, in the stock market, there are things called dividends that stocks pay out, and that's the same thing, but often it's like, 3%, 5%, 7%, not 200%. These projects are generating profit and they can redistribute their profits back to their holders. That's totally a normal thing. But you have to steer clear if it's promising like 1,000% yield. Like, where's that coming from?
Yeah. Yeah, these people are basically asking you to give them money and they're gonna give you back like 10 times your money. Who's
Yeah,
gonna do
yeah.
that?
If it sounds too good to be true, likely might be. So definitely do your due diligence and check that out. Give it a second look. Another thing is if those previous things I mentioned aren't in place, like if the team is all anonymous, if the Discord seems relatively empty, if they're not really posting updates anymore, that means the team might not actually be still working on that project. And I mean, where's the future in a project that's been abandoned, right? It's not going to have a great future. Another thing is if a project has been previously rug pulled. And so rug pull is a term that's used in the space to mean that, let's say the founders, the holders of the large amounts of the token just, dumped and it went straight to zero. Basically, there's a big red bar going straight down. Like after that point, I mean, it's not going to be a great idea, I think. So what you want to do is you want to do a fundamental analysis on projects to decide whether or not you're going to get involved. That means you're going to analyze their value proposition. So what makes this coin unique or valuable? The market potential. That's assessing whether the coin's potential market size and growth is going to continue. So let's say tokenization, for example, that's a massive market. Like that's trillions of dollars in potential market. And taking OSIS as an example right now, our market cap is in the tens of millions. So if right now we're at tens of millions and the potential is trillions, there's a lot of room for growth. And another thing you want to check out is partnerships. Are these projects that you're interested in partnering with reputable people and or big names in the space? For example, if they're partnering with Binance or Chainlink or other like massive projects, that's going to be a really good sign. So let's talk entry strategies. I mean, crypto, it runs in 4-year cycles. So you're going to want to get involved after the end of a bear market. And that's going to be hard to time. And I'm going to take you through the charts in a little bit. And we're going to look at how to better identify these things. But for crypto specifically, you're going to want to get involved during the start of a bull market. That's when prices are rising, optimism is getting higher. People are going to start making money. And that means that projects are going to have more money to do what they're actually supposed to be doing and build the software or the tech that they're actually building. Another part of the cycle is a bear market. So this would be exactly this perfect chart here. This is also like a perfect psychological analysis as well, because markets are really just maps of human psychology and human feeling on what an asset is doing and the future of it. So this is a very classic chart right here detailing the stages at the far left coming out of a bear market. So there's disbelief. No, this can't be. This is going to go down forever. My money is gone. Then hope starts to creep in, and people are feeling, okay, maybe this could be going back up. Okay, this, you know what, this project is alive and moving. Let's go. Optimism. Things keep going well. The project continues to announce fantastic updates. The team is active. Everybody's feeling good about it. The charts are going up. Okay, fantastic, great. Belief. Yes. Okay, I'm going to put all my money into this. I'm starting to get really invested. I'm telling everybody I know. Thrill starts kicking in. You're having FOMO. You dump all your money in. Euphoria. Oh my goodness, I'm rich. I've 10x my money. I've 20x my money. Yes. Well, everybody, come now. Cycles always run in these sort of, boom and burst sort of ways. And after a burst, it doesn't mean things are over, but it does mean like you have to cool off for a little bit. Things can't just go up in a straight line forever. So what tends to happen after euphoria? Complacency kicks in. Oh yes, just a little dip, no problem. Anxiety. Oh no, I'm starting to get worried. And then all the way down into capitulation, anger, and panic, and all of these sort of other sort of things leading into depression. But you know what? It always comes back around if you're invested in something solid. This right here is a Bitcoin chart. This is the chart from 2017, 2018, and into 2019. So these cycles don't mean that a project is over. It just means that we're entering a new phase. And after that depression phase happens for a little while, boom, disbelief, hope, optimism creep back into the market, and things can all start going well again. So that's why I talk about investing versus gambling. So if this was a meme coin chart, it wouldn't have that second, third, fourth boom. It would just stay flat because there's no real true value in it.
Right. And something I'd like to add here for people to understand the cycle is it's very much like seasons. You know how things are great and crops are growing and food is bountiful in the summer and even into the fall. And then when winter hits, like you are not gonna grow any tomatoes. You are not gonna, it's
Yes.
just not the time for it. It's a time
Yes.
for people to like reap what they've sown and cool down and take a break because
Yes.
everybody was working real hard at this time at
Yes.
the, when the season was on.
And
So
winter is not an evil thing. It's not a bad thing either. Winter is a reset period. It allows, if we're talking this farming metaphor as well, it allows the soil to rest and recharge. It allows all of that decayed material to break down and fertilize the soil for the next cycle. So
exactly.
these are actually requirements. I mean, you just simply require the seasons to make a healthy soil.
And healthy ecosystem. Actually, and what a lot of people don't realize, and the reason why we're talking about long term, having a long term mindset when getting into this world, is that some of the best projects in the world actually emerge out of the bear market or out of the winter. Like we'll
Yes.
call it the crypto winter. Some of the best projects in the world are there because they were a part of this whole euphoria and they were able to like build up the cash that they needed, the investment that they needed in order to now actually focus on building out their technology and building out the products that are driving this massive wave of tokenization. It's these people who, whether it's rain or shine, they're working. That's just like OSIS. We emerged out of a bear market. We built in a bear market to now enter into this phase where everyone is in the belief and the thrill kind of phase. we had to build in the depression and
Yes.
came out here. And a lot of other projects are going to be doing that too. And you want to keep an eye on those companies who
Yes.
are not sensational. They're not trying to be sensational or sell you sensationally when everybody's on a high. They're
Yes.
like they're just focused and working and diligent and building out real stuff, whether we're in a depression or in a euphoria, it doesn't matter.
Yes, absolutely. And me, as an individual, like I personally prefer projects that I have been building throughout the bear market. That to me proves that they're here for something longer term. Lots of projects are going to be cropping up over the next couple of months as we start to break all-time highs and as the market starts to get really hot again and enter into like the real crazy bull market phase. And if those projects aren't doing all that they can to really build a real project and put some money away in their treasury for that winter, they're not going to survive. So projects that have already done that, they have the knowledge to survive continually going forward. That's my belief on the matter there.
Cool.
Another thing you're going to want to do beyond identifying market cycles, this bear market, bull market, that sort of stuff, you have to first really think about your personal self as well. How much risk can you handle? How much money can you invest? These are things you absolutely need to consider before getting involved as well, so that you don't FOMO in your retirement money on the top. That's what you need to figure out. Set goals, really. Set short-term trading and long-term holding goals, and then stick to those plans. There's a couple ways you can actually get involved in the market too, from like a financial perspective, and that means like from like putting money into the market perspective. So there's a concept called dollar cost averaging. And what that means is essentially you're taking a fixed amount. Let's say every month you have, I don't know, $100 in savings that you want to put aside for investing. So every month you put $100 into the market. Rain or shine, doesn't matter. Summer, winter, every month you put in $100. That's what dollar cost averaging is. And the benefit behind that is that you're going to be getting in at an average sort of price level. So one day it could spike up and you buy there. One day it could spike down and you buy there. Over time, you're averaging in. So you don't have to have so much anxiety over, yes, exactly. You don't have to have so much anxiety over, oh no, like things are dumping, things are rising. Like you have a plan and you're sticking to it. That's a really great way for newcomers to get involved in the space. When I was first getting involved, that's how I did it. I dollar cost averaged every single month. I put money aside, put it right into the market. Doesn't matter, rain or shine. Um, so yeah, mainly it's just to reduce volatility and emotional decision making. That's what you want to kind of stay away from when you're first getting into this very volatile space, which it is. Another method is targeted buys. So if Jalal still has that graphic up here, yes, he does. These targeted buys are going to be when you're trying to pick these bottom points here. You're saying, okay, I think it's not going to go lower. I'm going to put in a large chunk now. Let's say I put in 3 months of my investment amount here because I think this is going to be a good point to get in. That would be you're trying to analyze the market, trying to time the market to find the best like times to get in low. And if you do this successfully, you're going to get a better return than with dollar cost averaging. But if you don't do it successfully, you're going to be susceptible to your own emotions, and you could potentially sell if there's all kinds of things that could happen if you're not disciplined. So another thing you can do is you can look at charts as well to kind of figure out where they're at, how the project's doing, how people are feeling about it. Like I mentioned before, charts are sort of just like a map of human emotions. So there's many different ways you can look at a chart. There's line charts, candlestick charts, concepts such as support and resistance levels. I'm going to pull up a chart in a moment after I take you through a couple of these concepts, and I'll actually walk you through like a live demonstration of how I start with a blank chart and build it up into something that I can make sense of. And the main platform I do this on is TradingView. This is one of the most popular ones for that. The other platforms I mentioned before, CoinMarketCap and CoinGecko, they don't really have a lot of like trading options on their charts. And so TradingView is what I use. And if you just give me a moment here, I'll pull up my chart and we can kind of dive in. So just give me 1 second here. I'll get that set up.
Yeah, while Justin pulls this up, here, let me take the spotlight for a second while you get things set up.
Sure.
Um, one thing that I would really like to emphasize to everyone watching is that one, this is not financial advice. We're not
Mhm.
here to tell you to buy something or to not buy something. More importantly, this is education on how to think and what kind of a mindset to have when entering this space.
Yes,
Yes,
ultimately, this is not financial advice, simply education. This is for you to do with it what you will. These are the tools. Teach a person to fish. That's what I'm trying to do here.
there we go. Teach a man to fish.
Okay, so can everyone see my screen? Just give me a thumbs up, Jalal, if you can see my screen. All right, fantastic. So what I have here is the Bitcoin chart as it would appear if you were to go into TradingView and open up a new fresh chart, except that I added the halvings. And these are these blue vertical lines here. These are the times when the halvings occurred. That's the only thing I've done to this chart beyond that. Other than that, it's a very fresh chart. First thing we're going to do is we're going to go over here. We're going to turn on logarithmic. That's going to be the way you're going to want to look at these charts. It's going to be a far cleaner approach. As you can see now, it gives a lot more vertical breathing room to the project here. If I go back and I turn it off, this previous cycle, you can't even see it. It's like it's non-existent. Everything's so exaggerated because of the extreme volatility of crypto. So you're not
Yeah,
going to get a very clean view on things. It's like if you were looking at the chart this way, you'd think nothing happened until like 2017, but that's not the case.
right. But Bitcoin was just at like under $5,000 back then.
Exactly. But if I turn on logarithmic, I mean, look at this insane explosive growth that essentially looked like a flat line compared to where we are today. So
Right.
that's going to be step one for my recommendation. Go and turn on the logarithmic view, and that'll help make things a lot more clear. Okay. So what I've also done here is I've added the halvings. And that's because that's a physical thing that happens in the Bitcoin chart and in the markets. And the reason I'm using the Bitcoin chart is because everything follows Bitcoin. This is like you can look at the Bitcoin chart for a general overview of the whole market.
North Star.
Exactly. And these halvings always result in a bull market. So if I can draw here, the halving occurred, a little period of time, and then massive upwards growth, right?
So
Same
wait,
thing. Mhm.
Justin, what
Yep.
what do you mean by halving? What is this halving thing that you're talking about? These four
Sure.
dates. I see that one's in 2012, one's in July 16, next
Mhm.
is May 20th, May 2020, and
Yep.
then
One just recently.
oh yeah, one just like last month, April 2024.
Yep.
What
Okay. Perfect.
what
Yeah.
is
So
this?
that's a great question. I did speak about this in one of the previous episodes, but to recap for everybody, the halving is when the supply rate of newly mined Bitcoin is cut in half. So during this 4 year epoch, that's what these cycle phases are called. During this 4 year period here, the halving, the block reward for miners was 6 point something Bitcoin. So every block that's mined, 6 Bitcoin gets released in the market. For this next period of time, that rate is cut in half. So now we're at three something. And that means for every block that's mined, 3 Bitcoin is rewarded to the miner that solves that block. And that's the whole system that powers Bitcoin security. This system of miners, the system of nodes, and miners are the ones that are rewarded with actual Bitcoin. That's what creates Bitcoin that can flood into the market. And over time, Bitcoin's inflation rate is going to go to like zero. Right now, we're at like 2%. Over the next couple of halvings, it'll drop basically zero, and it'll become like a deflationary asset. But that's a whole other concept. The
Well,
main thing
it's
you need to know.
mhm.
Mhm. The
Go
main
ahead.
thing you need to know is that these are very key physical changes in the space and in the network. So when these dates come, they're very important, and they always result in um, explosive growth because really it's all about supply and demand. And so if the supply of Bitcoin is reduced and the demand simply remains the same, price will go up to accommodate for that. And what we know is that demand doesn't just remain the same. Supply gets cut, and then price starts moving up. Demand also moves up, which is what creates this massive growth here. So I would recommend for anybody who wants to understand the market, go into your chart and add the halving dates and look at where we are right now. I mean, we just had one of these blue lines occur. And so what can we estimate is ahead of us? Well, that's where these amazing tools come in. And this one is called bars pattern. So what I like to do is I go to the previous halving and I go to the all-time high of, let's say this is the 2016 chart. I'll go and I'll put it here. And of course,
Wow.
you can't just say history is necessarily going to repeat because the market cap is larger now. But this can just simply give you a good perspective on what might be coming. So if you do that, I mean, here's a potential growth curve that we could be looking at in the future of the market based on historical returns. So we saw this fractal here. I'll make it a different color.
Hold on.
Yeah.
That says Bitcoin to a million. Whoa.
Yes. So that was a whole different, size of class back then. The market cap around this time was far less than where we are now. Do I
Hmm.
think Bitcoin's going to a million? I can't say it's not, but I also, that's not what my money is going to be betting on. I think that'd be a very extreme outcome. Another thing you can do to help give you some perspective is turn on some other indicators here. Okay, so whoa, a whole lot of colors just showed up. I don't know what's going on. Well, don't worry, we're going to dive in. So what we see at the bottom here are moving averages. Okay, so the one lowest at the bottom has the largest amount of time. So this one, let's say it's the 400-week moving average. So that means across 400 weeks, Bitcoin has typically gone up in a very smooth fashion. It's never really gone down. It just goes up over time, essentially. And as you move up through these colors of lines, you get more granular up to the actual chart itself, right? So this red line is just a little bit more smooth version of the chart, whereas this one down here is the most smooth version. And traders will turn on these lines to help give them some context and potentially like lines of support and resistance. These are concepts you should learn as well. So for example, this green line here often in the past acted as support, meaning the price didn't really ever go below that green line. Okay. And then as we've gone forward in history, this cycle actually, we had a very brutal bear market. The price went below the green line and even into further depths because we had a very brutal bear market with FTX and all of the crashes that happened. I remember people were saying that the industry wasn't going to recover for like a decade, that we would just trade sideways for a decade. Well, that didn't really happen. We ended up coming back above these lines here and bouncing off of them and then starting a nice springboard into the future. Okay, so these lines can help you analyze maybe how low the potential is for Bitcoin. So at this point here, the lowest it could possibly go, in my opinion, based on these lines, is $20,000. But we're not going to have a bear market right here because we just had a halving. So things are going to keep moving up for a while. And that's where these lines on top are sort of my guideline that I found historically relevant. If we take a look back in history, let's say the 2017 cycle, we saw the price go crazy after the halving, and it went above this fainter blue line up to this one. And what these are, they're the opposite. These are lines of resistance, not support. And these are based on basically the exact same thing as the bottom line. It's a smoothed version of the chart projecting out in history the rough estimation of the upper limits of where Bitcoin could be heading. And we saw in 2017, it broke above that for a moment, and then it kind of went back down. So it's
So,
a good place to check where things might be getting a little overheated.
so
Mhm.
Justin, when you talk about resistance,
Yep.
in reality, what is that resistance? What's happening that makes it an upper bound, like an
Sure.
upper limit?
So basically, I mean, technical analysis just comes down to a lot of people looking at the same sort of things and basically agreeing on what they're seeing. And so if a lot of people are familiar with this particular indicator here, they're going to look at that and they're going to say, oh, okay, things are getting overheated. And they're going to collectively agree, individually, yet collectively agree that they're going to sell. And that's what kind of makes the price do this, right? Like it doesn't always work out that way because the markets aren't a perfect reflection of the psychology of the whales, right? There's all sorts of noise that can happen, all sorts of external influence. For example, the ETFs that recently launched, BlackRock is one of the largest asset managers in the world, and they've recently launched Bitcoin ETFs across many of these different like asset managers. So are we going to stop at this line continuing out here? Like we do have to project it outwards further, right? We're gonna have to see where that goes. Are we gonna stop at this lower band of like, somewhere around the mid hundred thousands? No one can say for sure. These are only guidelines. And to go further into the concept of like support and resistance, and let me know if I'm getting like too granular here on this one. But these are horizontal lines of support and resistance. And these are more commonly used among traders than the moving averages, which is what these colored lines are called. These are moving averages here.
Hmm.
Oftentimes traders will use these horizontal lines to kind of indicate, where the market is and how it's doing. So what we saw in 2021, the market kind of topped here. We had a double top last cycle. It dipped. And then some people thought that that was where the bear market was going to start and we were just going to keep going lower. That didn't actually happen. And we had a second wind that actually topped out roughly just after the same like price level as before, creating a double top. And this is one of these patterns that exist in technical analysis. There's tons of these patterns that we can get into in greater detail in the future. And then after that, it started going down again. And people were like, okay, this is it. The bear market's here. And that's basically what happened.
Yes.
So what we can do is we can draw even more lines on the chart to kind of give more context and try and break down and understand what's happening here. And so you'll probably be wondering like, why am I choosing these particular points to draw on? These are like key levels here. So this is the peak, the first cycle peak, right at this particular point. And this is the lower high here. That's what that would be called. So the market went down and then it kind of like moved sideways a bit and bounced off of there, creating another structure point. Went up, touched this previous point here. This is resistance at this point. Went down, up, another little point here. This is a lower high as well. And then we just absolutely smashed through that previous thing that was support, smashed through it and went down. We were kind of coasting along there for a little while. FTX happened. Everyone thought the world was going to end. And then actually we eventually rose above that, bounced off of it as support. So when you're coming down on it, it's support. And when you're trying to bump above it, it's resistance. That's all that is really. And then it was very hard to break above this like start of the bear market point here, the $30,000 point. Very difficult to break above. Took us a long time. We did. We broke above it. The ETFs launched, and then we've been continuing to smash through levels. And now we're testing this point here, the 60,000 roughly area, as support. And to me, that indicates massive gains coming in the future.
Okay.
And so this
Now,
is a quick overview of like drawing lines and charting and analysis and that sort of thing. Mhm.
yes. Now, just to help people understand a little bit more, this is a little taste, everyone. This is a little introduction. If people want more of this, we can definitely build a, much more comprehensive course to this. We just want that feedback first and
Definitely.
foremost.
And
But
this is a little advanced. Like people aren't necessarily going to get involved in technical analysis and that sort of thing right away when you're first starting your crypto journey. But I think for me, it was instrumental in understanding what's going on psychologically, right? So if I turn all of this off, okay, the chart is just the chart. I have no structures to look at. I have no context. I'm like, are we going to go up or are we going to go down? I have, it's hard to say because there's nothing around here. It's just empty space. But everybody who's trading, their charts look like this. There's all sorts of structures to try and help give them a mental understanding of how other participants in the market are feeling about this whole thing. And that to me was very helpful in deciding, okay, I'm gonna buy and I'm gonna hold at this point because we've got so much upside based on history, based on many things, right? There's the history factor, there's the moving averages here that have also been historically relevant, and there's these horizontal lines of structure that have also been historically relevant. So that's three different facts or factors that to me indicate massive upside coming as well as the halving, which is like a physical change in the market.
yes, now for people to understand what all of these indicators are, the squiggly lines and the support levels and the resistance levels and all of this stuff, it's fundamentally humans. We are creatures of habit. We all have habits. There's when Justin mentioned resistance, like the top, you can see on the left side, the pi cycle top.
Mhm.
The reason we can consider that resistance is because people have individually but collectively agreed that, oh, that's a good place for me to sell. That's all it is. It's no more complicated than that. People have collectively thought, oh, I think other people are going to sell here. And then the other guys are thinking, well, I think other guys are going to sell here, or other people are going to sell here.
Yeah.
Everyone's collectively having the same thought, and that manifests on the chart. What this chart is telling you is it's a story. The chart is telling you the story of how people feel, literally feel and value this asset. This is not just limited to Bitcoin.
Yes.
It's any asset that has a chart that is trading in a public market. Even if it doesn't have a chart, it comes down to how people feel. And these tools that Justin is showing us are really, really like really good tools to use
Yes.
to to make more of an educated decision on understanding, okay, what is sentiment? How are people feeling about this? What are people doing? Why did certain moves happen? Like this big blue bar being the halving. Oh, that's a great indicator for me to be able to kind of predict what other people are thinking as well, because this is ultimately groupthink. This is the same thing that
Yep.
you'll see in Apple, in Microsoft stock, in Google stock, in anything in the stock market. It's
Yes.
ultimately the same thing. These indicators are meant to show you what
Yes.
how potentially other people are thinking as well, so that you can make a more educated, informed, less emotional decision, more of a rational, logical decision.
Exactly. Yes, 100%. And I appreciate that add-on, Jalal. The main difference between like the cryptocurrency world and the stock market world, let's say in Apple, they have earnings day, where they release their earnings and people go in and they analyze, okay, Apple made this amount of money. They were projected to make less than that. So they've actually done better. Okay, so then people are going to go in and they're going to buy the stock because the news was good, right? And there's an aspect of that as well in Bitcoin with news and narratives in the news and all of that sort of thing. For example, with the ETF, that made us pump massively. But the main difference between like Bitcoin and crypto and like the stock market is the halving. This is a physical change that happens in the code that directly impacts supply and demand. And to me, makes it so much easier to predict where we're headed as a market. It runs in very clean 4-year cycles. So after the halving, you have this period of massive expansion. Okay, yes, you're not going to be able to predict it exactly. Nobody knew there was going to be a double top last cycle. People thought it was going to be more like 2017, where it just kept, ramping up, 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 up to this point of like vertical insanity, right? Like we didn't really get that last cycle. We got this massive run for sure. And then we got a cooling off period in the middle and then a double top. The thing that you can be relatively sure of, though, again, like I'm not an oracle, I can't tell you the future, is that, after these period of halvings, there's a massive rise because it has to go up in value really to compensate the miners who power the network and also to rectify the fact of supply and demand. And supply and demand is like the number one thing that controls the markets. If there's supply for something but no demand, it doesn't matter. It's worth nothing. Then look at diamonds, for example, right? Um, there's supply and demand engaged in that market at all times. Like they control the amount of diamonds that enter and leave the space to kind of keep the price at a certain level. Bitcoin, this just happens automatically, like similar to the concept of smart contracts.
Yes, yes. And to add to this, it's a very interesting thing mentioning the halvings. It's like a built-in, a programmatic
Yes,
system that actually kind of forces the price to go up.
yes,
Um, but but like you said, it's because there's a limiting of the supply. It's like a tightening of the amount of Bitcoin that is coming out into circulation. And at the same time, more and more people are naturally adopting and getting more interested in Bitcoin and the Web3 space. So we see this mix of, oh, there's more people and more people want to buy Bitcoin. But at the same time, there's less Bitcoin getting out into the system. So all these new people can do is buy existing Bitcoin. And if we, the original Bitcoin holders, are like, well, hey, I'm not going to sell it at yesterday's price. I'm selling it at today's price, and it's a new price.
mhm,
Naturally, you get this compounding effect of price going up. It's like, I remember at one point in time, the PlayStation 5 was like impossible to get. Like they just kept selling out, and the manufacturer was not keeping up with the demand. And there was like hardly any PlayStation 5s in the market that you could buy, but everybody wanted one. And so what happened is it went up from being a few $100s to being like $1,000 plus, to being $2,000 plus, to being so much more. Or
exactly.
another good example is that Kanye West releases his Yeezys, his shoes, and he makes like just a certain amount and they sell out, and they don't make many. And if it's like, if all you have is this few number of this item that everybody wants, well, it's going to go up in price because someone's going to buy it and they're going to be like, all right, I'm going to make a profit on this. Well, you can't pay me the standard price. I stood in line for 3 days to get this item at the original price. I need you to pay me triple that amount. And that's going to keep happening and happening. And that's what's happening in the, like the Web3 space with Bitcoin specifically when it comes to the halving. What I want to extend this concept to for everyone to understand as well is this is something very interesting, and it's something that major institutions have found because, okay, there are two kinds of people, or two groups of people that are buying into Web3 and particularly Bitcoin. And it's regular people like you and me who see the vision and believe in decentralization and want a digital future, like a digital currency future that's like decentralized, that's free from government or other control. Money, the currency of the people, right? We all believe in that. There's people like us, and then there's institutions like banks and BlackRock and big players who are almost exclusively making decisions based on profitability and their bottom line. And they have big wig analysts looking at this kind of stuff like, okay, if we invest at this point and we put, $10 billion into it, what is our projected profit? And these people have realized that if you hold Bitcoin, if you've held Bitcoin at any point for 5 years of time, you are either break even or profitable. This is the fact of the matter. It's
Yes.
it's built into the system that every 4 years this four, well, technically 5 years, this thing happens where the supply decreases and the demand increases in Bitcoin, so it goes up. But these people have realized for everyone in the world that okay, this because this industry is growing so rapidly, um, and what we've talked to you guys about at the very beginning of this course about this wave of tokenization, anybody that has seen the vision and held instead of going crazy and trading every day and stressing yourself out, anybody that's even just held has put themselves in a good position for the future, as long as it's a legitimate thing that you're holding and you're supporting. And you got to really get behind this thing because here, let's switch spotlight. When I talk about holding, so we talked about holding Bitcoin, people who've held it for 5 years. It didn't matter at any point in time, in the entire history of Bitcoin. If you've held for 5 years, whether it was 2012 or 2009 or 2016, any 5 year period would have made you break even or profitable. But that's because what Bitcoin is and what it's creating is something that is the future. That is this reality of tokenization that will bring hundreds of trillions of dollars industry into the world. Now, now looking at other projects that you can get into and support and get behind the vision, why I'm saying that like you have to really get behind this vision of another project. For example, OSIS is because some days are going to go, be great. Some days will be summer and sunshine and rainbows, and some days it's going to rain, and some days it's going to be winter. You've got to have some serious like conviction and really believe in what this company and project and team is building and the vision that they're creating in order to weather those storms, right? It's going to be stormy sometimes.
Yes. And actually, you know what? Just on that note right there, I wanted to reshare my screen here and just exactly point out something you were just mentioning. Imagine you were someone here who was kind of trapped in this like downward spiral, and then Bitcoin did this, right? It literally just dumped like crazy. People thought it was over, The same thing happened during FTX. People thought it was over, but you have to have conviction when it comes to your investments that you're going to hold on to this thing because why did you buy it in the first place? Because you
Yes.
believe in it. You
Why
believe
did you buy
believe
it
in
in
the
the
team
first place?
and you believe in your own thoughts around it. Why are you gonna sell at this point here? It doesn't make any sense. You just hang on. Oh, comes back alive. Look at that. There's always gonna be volatility, especially in this industry. But I mean, everything sort of does rise with Bitcoin. I mean, that's sort of how the industry works.
And
Just talking Bitcoin, people invest in this, they get money, and then they're like, okay, I want to start diversifying as well, and then it flows down from there.
yes, and it's because it has actual value. Something that Neil's mentioned here, which ties this whole segment together, is that he's like, well, instead of caring about where others may sell or buy, I believe it would be more a stable economy if people looked at the actual value. And that's a really, really good point. That's exactly what I'm talking about with like, getting behind something. Are you getting behind a Ponzi scheme, or are you getting behind, a real project with utility and value that is building to make a difference and manifesting and bringing this future, this tokenized future, this digitized economy that's hundreds of trillions of dollars worth? Are you supporting those projects, or are you trying to do a get rich quick scheme? Because a get rich quick scheme is usually people doing a get rich quick scheme on you in
Yes,
in most cases.
yes, exactly. Like, why are people out there creating projects that are just going to make you rich? Nobody's doing that, right? Like, nobody, they want to get themselves rich, and that's what a Ponzi scheme is, and that's what a faulty investment is, and that's gambling. I mean, you go to the casino, you think you're going to make yourself rich? No, the casino is controlling this building here. They're controlling the game. They're going to make themselves rich. But if you invest in a project that's actually building something, what is the mindset behind someone who's actually building something? They care about the world. They want to make the world a better place. And so they're not just in it for a quick pump and dump to make themselves rich. Why would they do that? There's so many other ways to get quickly rich. You know, people who are building something legitimate, they have a long-term perspective on their dream for the world, their vision for the world.
Right. And you mentioned mindset. I'm glad Nils dropped this. He's like, my mindset is this. People are going to place their money somewhere as so long. I'm going to reread that, Nils. My bad. I misunderstood this. So Neil's like, so long as I've placed my bets or my bets, but my money or my investment and my support in a good idea with a good and committed team, I'm always safe in the long run, even if the price goes down. It's literally that easy. And I want to take a step back from talking about like it as money, because more importantly, it's time and it's energy. It's your support. Money is just another form of your energy and your attention, right? Money is just the physical form of like, okay, I went to work and I worked 8 hours and I got this much money that day and now I'm putting it towards something. If we talk about like your support, your time, your energy, your thoughts, your participation, your use of their products or being active in their community of a project, what are you supporting? What do you truly believe in, right? A lot of people would tell me, hey, I believe in I believe in cleaning water and clean water, and I believe that clean water should be a human right. Well, if there was a project that was presented to you that would be a collective of you, a large community of like-minded people, and a project that has real technology and gives you the ability to not only just support them like emotionally, but also to be a participant in their growth. I think that's a very, very powerful thing that Web3 and tokenization enables for you
Yes.
to go, wow, that's
Yes.
something I believe in. Instead of just donating to a random company, it's like, no, I'm putting my time and energy into this. I'm supporting this company, this project with a team who've built a technology and a solution to a major problem that I believe in, and that we can move forward collectively. That's the power and the strength in numbers that blockchain Web3 and this tokenization concept truly embodies. That's the whole point of Bitcoin. That's the whole reason it was made in the first place, is to empower the collective, but individuals at the same time. So when you support something that's real and you see the team working hard and you guys are of the same mind, of the same vision, and you're able to do what you can beyond just money, but also participating and sharing this and bringing more people into building something real to solve a real problem to make money, right? That company grows. If they solve a real problem, they will receive that energy back, right? If they go and they build a device or a technology that actually purifies water, for example, and you as a collective now deploy this technology to certain regions in whether it's locally or whether it's nationally, like some places in the US, for example, have like terrible, terrible water supply, especially in the Midwest. Um, but it's like, hey, you solve a problem. That thing makes money. That thing gets that energy back, and that comes back right back into the people who built it. Like that's you, and your investment increases because y'all solved a real problem together collectively. That is the power of tokenization and Web3 and decentralization.
Wow, fantastic. I mean, I think that's a great way to frame all of this amazing thing that's occurring. You know, it goes beyond just making profit. It really like there was an example you gave a little while ago during one of our previous episodes. Imagine there's a company that's trying to cure cancer, and you know, it's like, how do you raise money? It's so difficult, but through tokenization, it becomes easy. And then imagine you can invest in that company, and then you can say that you helped the cause of curing cancer. I mean, that's crazy. And that's
And
what
it's
this is all about.
powerful.
It's about making the world a better place.
Absolutely. Okay, so Justin, any thoughts to wrap today's episode up on your side? Anything else?
No, I mean, I think I gave a good overview of how to get into the market, how to look at it, some of the structures you can apply to try and understand the mindset of the other participants. Um, So yeah, I mean, I hope that was fairly clear for everybody. If not, always my DMs are open. I'd love to answer any questions, and we're always still working on this. You know, like we're gonna have more episodes in the future, and anything that goes unaddressed now, we'll certainly address in the future. So let us know your thoughts on the course, the content, and if there's any gaps you're missing.
Fantastic. Okay. Well, hey, for anybody that's in here. Feel free to give us some feedback. We want that feedback. Thanks so much, Nils, for everything that you're sharing in here. If you guys are on other channels, doesn't matter. Just reach out to us in the DM and let us know what you think.
Mhm.
Or if you have any specific requests, any subject requests, topic requests, we're still building out every aspect of like the entire OSIS University, this initial beginner course, this introduction. Let us know if what you thought about today's episode. Nils, I'm asking you as well, and how we can improve. So that's it for me. This is Jalal signing off. I'll see you guys in the next episode, which will be next week.
Sounds good.